I can't tell you how many people I talk to who say, Ollie, I want to get involved in investing, but I don't know where to start. It's so complicated because it's a mad, wild world. So today I'm going to tell you a little bit more about eToro's CopyTrader feature, their most popular feature, which means that you can copy some of the most popular investors on the platform and you don't even have to lift a finger. They buy, you buy. They sell, you sell. Absolutely fantastic feature, but you have to be very careful with it. If you are not and you don't follow some rules, you're going to lose money. So today we're going to dig into how to find the best popular investors on the platform, what to look out for, and ultimately how to be successful in doing it. So let's get stuck in. So let's take a little look at the actual dashboard and go to the CopyTrader so you can understand how it works and what it looks like, okay? Now, I have opened up my virtual portfolio on my eToro account. When you open up your dashboard on the left-hand side, you're gonna have something called CopyTrader, okay? This is what you need to click on to start viewing all of the other copy traders, okay? Or what they call popular investors. So let's go to CopyTrader. On here, you're going to be presented with the trending investors at this point in time. Funnily enough, 𝗟𝗘𝗡𝗡𝗘𝗖𝗧, I actually looked at the other day. So very interesting there. We can dig into that in a little bit more detail soon. Down below that, you can actually look at the most copied over the last year. Now, Thomas Parry Jones is on there. We're going to use his account as a demo to go through some of these settings. Absolutely amazing, popular investor. Some of my friends in the UK do copy him as well. If you are interested in copying Thomas, the date today is Saturday, the 28th of June. From the 7th of July, the minimum amount you can put in to actually copy him goes up to $20,000. So if you want to do it before then to copy him, I'll do it quickly. Now, moving on from there, you can have a look at the market outperformers as well. You can look at who are focused on ETFs, might have a little bit more stability in it if that's what you're looking for. You can look at the investors with long track records and diamonds in the rough. So the ones that are up and down, but usually have good returns. Now, this all looks fantastic. There is a lot of green on this screen. And if you're an investor, you're going to know that green is good, red is bad. So that's a fantastic start. But that is where, after looking at reviews on platforms like Reddit, I found a lot of people saying, I'm losing money, CopyTrader's terrible, the investor I copied was awful, but looked great at the start. That's because you didn't dig into them in enough detail. I think some people just blindly copy and then get upset when they lose money. So let's have a little look into Thomas, for example, and run through some of these settings. Now, to start with, once you open up Thomas's profile, you're going to be presented with the performance dashboard, okay? Now, you can see here, I'm copying him on a virtual portfolio. I do my own investing, because I want to become a popular investor. But you can see how much you got invested in that person on the right-hand side. As you can see, currently 18% up. And I think I started investing or copying Thomas in around March, April. So very good in that short period of time. Now, you'll see for 2025, he's had a 31% return, which is exceptionally good. 2024 was 31% over 2023. This consistency is really what you want when you're looking at a popular investor. You want to see consistency in their profile, okay? A few other things you need to look into are their risk scores. Now, a risk score is important because it shows how volatile their portfolio is. So if we go over to the statistics and we scroll down, you've got portfolio risk here. Now, a popular investor has to keep their risk score below 7. If they go to 7 and above, you can no longer copy them, okay? Because the profile or the portfolio is just too risky. And eToro stops that, which is fantastic. So you'll see he's had a max risk score recently of 6. He did go up to a maximum of 6 at one point or a couple of times, but before that, he's been averaging around 3, 4, which is fantastic. You can see here on the risk contribution, if you click on this, you'll see how much risk is allocated to each individual stock in his portfolio. So Palantir right now is 10% of his portfolio weight. he is going long and hard on Palantir, but they are doing some really good things in the market. So I do trust that they're going to do quite well. But there are some videos that some of these popular investors release about their strategy and what they do as well. So by all means, have a look into that, okay? Now, you can break down month by month how well they've performed as well. You'll see March was a red month for him. From the top of my head, that is when President Trump decided to bring in the tariffs. So I think a lot of the popular investors were red at that point in time, but there was a strong recovery there as well. Something else I'll look at on the overview of the popular investors homepage, you'll see on the right hand side, it will say about Thomas or about whoever else. If you look at their bio, it will just give you a little bit more information on them. A few things that I would definitely avoid if you're going to do this. One, anyone that uses leverage. What is leverage? So leverage basically means that if you invest 100 into a stock, that's 1 times leverage. If you invest 100 but it's on 2 times leverage, it basically means the profit or the loss will be multiplied by 2. So essentially you're putting in 100, but the actual position is $200. So you can lose a lot more than you put in. So avoid leverage as much as possible. Also try to stay away from anyone that is shorting. If you go long, you're buying for the long run to predict it's going to go up. If you're shorting, you're predicting that it's going to go down. Shorting can also be quite dangerous because if that stock starts to go up, you don't know when it's going to stop, right? So stay away from anyone shorting. I personally stay away from anyone involved in cryptocurrency. I've traded it a few times myself, but there's so much volatility there. There's nothing wrong with crypto, but I would just say if you're going to invest in a popular investor that has crypto in the portfolio, prepare for a lot of volatility. You have to. And that's why I stay away from it. I don't like the ups and the downs. It's too emotional for me. You never know what's going to happen. If you are going to do it, go with someone who's invested in Bitcoin, just Bitcoin. Stay away from anyone that invests in altcoins because altcoins really are volatile. I had Jasmine once and that plummeted by around 70%, 60-70%. And that wasn't a fun few months. Just stay away from altcoins. Now, coming back to Thomas's profile, you can see here as well, you've got a lot of pin posts from him. So you can have a little look through these, have a read about what he's been talking about recently. You've then got the news feed as well. And a lot of the top popular investors will post quite often. So you can have an understanding of what they're talking about, what they're seeing happening in the market, which is great. There's a lot of visibility there as well. Here we go. You'll see that the minimum copy amount on eToro is $200. He recommends $250, but from the 7th of July, he will be going to a minimum copy amount of $20,000, which is fantastic news for him. I mean, he is the #1 copy or popular investor on eToro. Now, let's go back up and have a little look at the statistics again in more detail, okay? You can see a breakdown of the portfolio, 100% in stocks at the moment. You can also see the expected dividends that they have in their portfolio as well. Remember, anything they buy, you buy. So if they've got 0.54% in dividends, you will be receiving exactly the same, okay? But he is more focused on growth. Now, there is a sneaky little trick here that I think everyone really needs to pay attention to. Not enough people look out for this, okay? If you are going to copy someone, under here it says additional stats. And then it says average holding time. He has an average holding time of 1.5 months. This, I really think, is the golden egg as such in finding a good popular investor, because it means that he's in and out of trades quite often. If there's going to be a dip in the market, the likelihood is he's going to close down some trades. When you start copying someone, say you put 1,000 in, hypothetically, if they have multiple positions open on American Express, it will copy all of those positions at the same time, okay? If they've been dollar cost averaging, as in buying stock in American Express over the last year, and they had them at a lower price and a higher price, and it was a mix of all, when you start copying, it's going to open all of those positions at that single price. You need to take that into consideration. And I think that's why a lot of people play around with eToro's CopyTrader and say, I'm losing money, it's because they found someone who has an average position open for 10 months, 11 months, 12 months. Some on here are 35 months having positions open. They then copy them and they wonder why they're losing money. It's because these popular investors purchased that stock back in 2023. It's been 2 years. Yes, there's a high chance it's going to be a lot higher. And then as the stocks start to go down, all of your investment drops as well because they're not consistently trading, you know. Thomas is very good, 1.5 months. There's a couple of others on here around 2.5, 3 months. So have a little look into them instead because they're gonna be a lot more active. You can see his copiers, the amount of copiers he's had has increased quite drastically, 6% over the last 7 days. Probably got up higher given the fact that he's going to increase his minimum copy amount from July. So yes, try and keep that average copy or average holding time as low as possible. Okay. Now moving on to the portfolio. If you click on the portfolio section, you're going to have a list of all of the stocks that they've got in there at the moment. Okay, these are all of their open positions. So let's have a little look at Rolls-Royce, for example. You can see how many trades he's got open, the current profit that he's got on there or loss. Now, we mentioned leverage earlier on. Here you've got leverage and it says 1x leverage. That is what you want to see. If you've got someone that says 2x leverage or 5x leverage, my personal recommendation would be stay away from them because it's going to be a bumpy ride and you can lose a lot more than you put in. So I'll stay away from that. So very good on this front. So if you go back to the portfolio, on the top left-hand corner, you'll have the portfolio section. Click on this and then you can go to history. That will show all of the positions he has closed down, okay? This is just you investigating Thomas from that page, and I will show you shortly what it's like once you actually start copying him. But you can see what he's opened and what he's closed in here as well. You'll see that it's been a 3.5% return over the last year from closed positions. Remember, there's more positions that are currently open as well, okay? You can also go to the chart. Now, this is interesting if you want to compare to the SP 500. So if I type in SP 500 or anything else, you can compare here as well. It's doing very well on that front at the moment. But if you want to dig into that in a little bit more detail, go to statistics and you've got the compare portfolio here on the right hand side. Now, if you can change this actually between 1 week, 1 month, 6 months. Look, it's constantly beating the SP 500, 1 year and even 5 year. That is what you want to keep an eye on. I would check all of these if you can, just to make sure they are outperforming the SP 500. If they are not, well, if they're not, you might as well just invest in the SP 500. I mean, it's 500 of the biggest companies in all of America. If your popular investor is not beating the SP 500, just stick it in the SP 500 or find another popular investor. So that's pretty much the profile wrapped up in one. Now, if we go back to the CopyTrader page, and if you go down here and click on View All, okay, you can then actually start digging into more popular investors and use different filters to find exactly what you're looking for. A good little trick, copiers change up here. If you click on that, you can actually order it in the amount of copiers these people are getting, okay? This can be interesting to look into because if you see spikes like this is the guy I mentioned at the beginning, Kevin Pando, Italian guy, really good returns over the last 2 years. Even during Trump's tariff war, it seemed like he was still increasing as well. And if we look at his profile, he's a manager at Deloitte, one of the big consultancies, which is great. He has a small portfolio, a good thing to touch on. He's got 7 different stocks and an ETF in the portfolio, which is good. I would usually look for maybe a few more than that, but I don't think there's anything wrong with that whatsoever. If you come across a popular investor who has 50, 60, 70 different stocks, once again, I would probably stay away from them because it means that they are just spreading too much risk. They have no idea what they're doing. You don't want someone with that. Think about it. Berkshire Hathaway are one of the biggest funds in the world, and they have, what, 50? I think they've got 50 stocks in their portfolio, but they have a giant team looking after them. How can one guy look after 50 different positions? It's too much. So anything between 10 and 20 would be good. I'm trimming mine down at the moment as well. Advice from someone else I received recently. So keep an eye on that. But I like this guy. He looks good. I am currently, as you can see, pending. I have decided to copy him, and that is going into my virtual portfolio. My advice is always use the virtual portfolio for a few months to see how well they perform, instead of going straight into live, because you want to make sure that you're getting your return over a few months, give you a little bit more confidence. Just remember, if you copy someone when the market is bullish, i.e. going up, it will look good. That market can turn at any point. It's not a reflection necessarily of the investor. It's just the market has turned into a bear market. So make sure you're doing it at a good time. So very interesting, popular investor there as well. So have a look at the copy change. Have a look at some of these. This guy at the top, I know I had a look at him earlier on. He's using a lot of leverage, 5 times leverage. I'll show you what I mean here. If you go to the portfolio, where are we? And you say, click on Citigroup. This says 5 times leverage. That's dangerous. Yes, the returns are great. 241% return. However, if that went down to minus 241%. So I would like to think someone like that would close the position before it got to that point. But I, once again, would stay away from leverage. From what I understand as well, there are overnight fees when you use leverage as well. So he's had this open since April. So it's now June. He's going to have 2 months worth of overnight fees on 5 times leverage. It's going to be a lot of fees. So be very, very, very gentle on that as well. Okay. Now, let's imagine we have copied some. So you can see here some of the popular investors that I am copying. You can just go to portfolio on the left-hand side, and it will come up with a list of everyone you are copying in there. You've got Mr. Thomas there as well. 𝗟𝗘𝗧'𝗦, I can never pronounce his name. I do apologize if you're watching this and I've just butchered your name. He's very good. Thomas is more focused on the US market. 𝗟𝗘𝗧'𝗦 is more focused on, from what I've understood, the European market. And I find a nice balance of the two there as well. But let's go back into Thomas and have a look at the profile there. Now, these are all the positions that are open underneath him as I'm copying him, okay? At the very bottom, it says total closed. So click on that. These are all of the closed positions under your portfolio. So if you're copying him, you can actually have a look at what the profit has been on each one. And they're minimal. But remember, that is one of the benefits of CopyTrader is that there are no fees. It's fantastic. If you're doing this individually, there are fees if you're outside of the UK. If you're inside the UK, it's completely free. There's obviously a spread, but it's free. If you're outside of the UK, I believe it's €1 per purchase on a stock and €1 if you sell. But if you're in the UK, it's free. And if you're copying outside of the UK or inside the UK, it doesn't matter where. If you're copying a popular investor, it's completely free as well. There are no fees on each of the trades opened. So you can see here exactly what has been bought and sold recently. If you want to invest more, click on invest more at the top. You can put in the amount, update, and it will invest more. Likewise, if you want to pull out your money, the 3 little dots. Oh, no, let's do that properly, Oliver. If you want to pull out money, go to the portfolio, click on Thomas. Now you can do there, invest more, remove funds. You can pause if you want to. Now adjust stop loss. Very, very interesting one we can look into here. So if you click on the adjust stop loss and change this, it's usually on the amount, but change it to percent. I've set this to 5%, which basically means that, and prepare for this one, this is mind-boggling. If your portfolio drops by 95%, copying Thomas, it will then close down all the positions and stop copying him. You want to have this at that amount, because if you have it at, say, when it drops by 20%, it will close all the positions and stop copying him. Things like when the tariffs came into play, COVID came into play, the tech crash of 2022, all your positions would be closed down. That's not what you want. You need to be able to have the flexibility there, the freedom for the swings in your trades, okay? And you're putting trust into someone to do this. If they suddenly get closed out, you're going to end up losing money. So to do this, everyone recommends allowing the portfolio to drop by 95%. It does depend on your risk. But I've just said fine because I'm trusting these guys to go ahead and do it. I've got a lot of friends in the UK who do the same. But to do that, you need to set this to 5%. That's confusing as hell. It means that when your portfolio gets down to 5%, which is minus 95%, it will then close off. So you need to set this to 5. At first, I was doing 95% and I'm wondering what was going on. That's why. Set to 5%, update it, save it. It allows your portfolio to swing however you like. So keep an eye on that as well, okay? The time that would be useful actually is if, once again, if you used someone with leverage, at least it will close down your positions before you end up bankrupt. So what else have we got in here? Let's move down from here. Stop copying. You can write a new post and it will tag Thomas straight away if you do want to. And then from here, you can view the chart with Thomas and you can customize all of these different columns to see exactly what you want to see. So that's pretty much it in a nutshell. It's really, really, really simple. Once again, you just have to be very careful of who you are copying and what you are doing. But to wrap up, I think a few things you do just need to really focus on if you're going to use CopyTrader, which is a very powerful tool. No matter what you read on Reddit, it's a powerful tool. You just have to do your research. Not enough people do their research. So let's have a little look into some of the things you need to keep an eye on. Firstly, try and have a look at a score that beats the SP 500 or a return that beats the SP 500 on your popular investor. Try and keep a risk score between 3 and 6. If it goes over that, not good. If it's lower, there's probably not going to be a lot of movement in the portfolio. Find someone that does not use any leverage or shorting. Once again, you know how to see that now on their portfolio screen. Look for someone with a long-term strategy with a solid holding time. Anything between, say, 1 month and anywhere up to 4 or 5 months holding time, which you could see in the statistics page, is probably good. Anyone with 35 months, you're probably going to end up dipping down and losing money because they've just invested in it many years ago and they've left it to run. I would be in a very solid position if I invested in Google 3-4 years ago and Meta. It's not the case, okay? So you need active investors on there. Have a look for someone that's got a well-diversified portfolio, not all crypto, and I would stay away from anyone in Forex. You need someone that has ideally got some investments in the US market and ideally some outside of the US market, but that isn't a deal breaker. Something else to look into, make sure their copiers are increasing steadily. If they have an increase in the copiers, fantastic news. Well, that's what you want. It means that they're popular. Kind of makes sense, right? The copy amount minimum is actually 200 on eToro, but they all recommend 250. I say 300 minimum. It makes sure that you're going to open every single trade that they do as well. Another thing to touch on, if you have £1,000, hypothetically, okay, do not just lump 1,000 in there. You need to make sure that you take that, say 25%, you invest it 1 week, you then invest in the next 25% the following week, and you keep going until that money is gone. If you plonk it all in there at the same time and then the market drops, then you're in trouble. Yes, they're going to be active traders. That's what you're ideally looking for, but dollar cost average it into that popular investor. That's the ideal thing to do. Avoid copying in very volatile markets. If the market opens, or say you invest at 330, for example, it's going to be volatile. The first 1 hour of the market opening is an incredibly volatile time. So try and invest in the middle of the day when it's a little bit calmer. Definitely something you need to look into. On top of that, make sure you've got all the right settings set up, including that stop loss. You don't want to be stopped out too early when you're copying someone. So move it to at least a 95% drop or just turn it off completely. If you found the right popular investor, they're going to be opening and closing trades all the time, looking at that average hold time. So they shouldn't ever get to that point. Yes, there's going to be some volatility in every single popular investor you look at, but it shouldn't drop by that much unless you've got someone with leverage or a hell of a lot of crypto. So that's pretty much it in a nutshell. CopyTrader can be such a smart way to help grow your portfolio, but only if you copy the right people. That's the most important thing, and not enough people do their research. They just blindly copy someone because they see either a huge return in the last 3 months or lots of copiers on there. You need to make sure they're growing steadily and they have consistent returns and they're beating the SP 500. So please do your research and give it time. You cannot make a quick return within a month. You need to wait 3, 6, 9, 12 months to actually make a return and keep putting money in there. That's the most important thing. If you like this, please do like and subscribe. I will be releasing more videos on how to invest, how to use eToro, who some of the good popular investors actually are, and some of the strategies that I've learned and picked up over the last year or so during my investing journey. If you have any questions, please drop a comment below and I'll get back to you as quickly as possible and try and help you on your investing journey as well. But thank you for tuning in and have a great day.